Welcome to the deep dive. The crypto world just moves incredibly fast. News breaks all the time, it feels like.
It really does. Blink and you miss something major.
Exactly. So today, we thought we'd do something interesting. Just take one single day, June 18th, 2025, and really dig into the headlines.
Like a snapshot in time.
Yeah, precisely. We're grabbing a stack of your sources, CoinMarketCap, various crypto news sites, and our mission is basically to pull out the most important bits of knowledge or the real insights, give you a shortcut so you don't drown in all the noise.
Cut through the clutter.
And speaking of immediate stuff, there's actually some urgent news just breaking about Binance and IoTeX. We should probably start there. What's happening? What does this mean for people right now?
Yeah, this is pretty immediate. So COINTURK New W has reported it. Binance is putting a temporary stop, a suspension, on IoTeX transactions.
Okay, so trading, moving coins in and out.
Exactly. Trading, deposits, withdrawals, all paused starting tomorrow, June 19th. Now, they just say temporary suspension.
Right, which could mean anything.
Well, often these things signal something's happening behind the scenes. Could be a major network upgrade, maybe a security check. Sometimes it's even, regulatory stuff they need to align with.
So for IoTeX holders on Binance, it basically means hands tied for a bit.
For a short time, yes. Restricted access, less liquidity on Binance specifically. But like I said, it often happens right before a big protocol update or maybe some kind of operational improvement. It's usually temporary.
Okay, good to know. But this single day, June 18th, it wasn't just about IoTeX, right? You mentioned broader trends.
Oh, yeah, definitely. If we zoom out from that specific action, the news from just this one day paints a really fascinating picture. We've got these incredibly bold predictions for Bitcoin.
I saw one of those, yeah.
Right. And then there's this whole dance between traditional finance and blockchain, how they're starting to merge. Plus, we even get some hints about what the smart money is looking at in the altcoin space.
Okay, let's get into that. Sticking with the big picture for a moment, that prediction you mentioned, I saw this headline from the Crypto Times. Analyst predicts Bitcoin price to hit $3 million. Here's how and when. Wow, 3 million.
Yeah, it's definitely an attention grabber. This comes from an analyst named Brad Mills.
Yeah.
And he's put this idea out there that Bitcoin potentially hitting $3 million per coin.
That's quite a leap from where we are.
It's huge. But it's not just a random number. The idea behind it, his thesis, often revolves around something called hyper-Bitcoinization.
Ah, the idea that Bitcoin becomes like the main global money.
Essentially, yeah. That it becomes a global reserve asset because it's scarce, it's decentralized, it resists inflation, all those core properties. So in that view, it's not just another asset fluctuating. It's fundamentally repricing itself against dollars, euros, everything.
So that's how you get that potential 100-fold increase in market value he's talking about.
That's the thinking, yeah. A complete shift in how value is measured, potentially driving that massive price increase. Highly speculative, of course, but that's the concept.
Okay, a 100x prediction is definitely food for thought, but like you said, speculative. Let's look at something happening now. It's Bitcoin World reported US Spot Bitcoin ETFs see remarkable 217 million inflows, signaling strong demand.
Yeah.
That feels more concrete.
It absolutely is. This is really significant for the here and now. That $217 million flowing into the US Spot Bitcoin ETFs in a day. That's not just small retail investors jumping in.
Right. This is bigger players, institutions.
Exactly. It shows significant institutional interest, plus, more sophisticated retail investors using these regulated ways to get Bitcoin exposure. It signals this growing acceptance, this confidence from the traditional finance world.
And that kind of inflow, it probably helps build a more stable base for Bitcoin's price, maybe counterbalancing some of those wilder predictions.
Precisely. It adds a layer of, let's say, foundational support and legitimacy in the eyes of the broader market. It shows real demand through established channels.
So, with institutions getting comfortable via ETFs, how are governments keeping up? Which brings us, actually, to Europe. Contribune EN had this headline, Franklin Templeton warns EU may fall behind in crypto race. I thought Europe was kind of ahead on regulation.
They were, or at least they seem to be setting the pace early on with things like MiCA. But Franklin Templeton's warning here is quite sharp. They're basically arguing that Europe might become just a corridor through which innovation passes without ever being retained.
Meaning?
Meaning, while the EU is busy dotting I's and crossing T's on its regulations, maybe moving a bit slowly, other places like the US and parts of Asia are moving faster, creating rules, and actively trying to attract crypto businesses.
So the speed of regulation is crucial for keeping the innovation there.
Yeah, absolutely. Speed and clarity. If the environment isn't clear or if it takes too long to get rules in place, the talent, the investment, the new projects, they might just go elsewhere where things are moving quicker. You risk losing out.
Interesting. And speaking of pushing boundaries and integrating, there's this other piece from 36 Crypto. Coinbase pushes for SEC approval to offer tokenized stocks on blockchain. Now that sounds like a direct bridge between traditional finance and crypto.
Oh, it's a huge step, a really major move towards merging those two worlds. Coinbase is actively trying to get the green light from the SEC in the US to list stocks, but as tokens on a blockchain.
So like owning Apple stock but as a digital token.
Kind of, yeah. And the benefits aren't just, say, faster settlement times, although that's part of it. It's about using the blockchain itself, the smart contracts.
Right. For things like, what, fractional shares?
Exactly. Fractional ownership becomes easier, potentially trading them 247 globally, maybe even automating some compliance aspects. It could fundamentally change how we access, trade, and even think about owning traditional assets compared to how it works now.
Wow, that really does feel like convergence. But what kind of hurdles do you think they'll face with the SEC on tokenized stocks? That sounds complicated.
Well, you know the SEC. They're always focused on investor protection, and rightly so. Figuring out how to ensure that same level of protection within a more decentralized blockchain-based framework, that's likely going to be the big challenge for Coinbase to address. Disclosure, custody, market manipulation risks. All those things need clear answers.
Makes sense. Okay, let's shift gears a bit. We've talked big picture, Bitcoin, regulation. What about altcoins? Crypto Newsland had this piece, 3 cryptos, smart money is accumulating for the next altcoin season. Who exactly is this smart money and what are they buying?
Good question. So smart money usually refers to the big players, maybe institutions, dedicated crypto funds, or those large individual wallets, often called whales. People watch them because they assume these players have better information, maybe deeper research, or they're just playing a longer game.
Okay, so what did the report say they're accumulating?
Right. It highlighted 3 specific ones. First up was CRO.
Crypto.com's coin.
Yep. Gaining steam, apparently, not just from its usual uses in trading and payments on their platform, but also because Crypto.com is reportedly making a big push towards institutions, trying to get major financial players involved in its ecosystem.
Interesting angle. What else?
Then there was PI. It's apparently looking towards a potential rebound, and this is linked to a big token unlock, coming up 68 million tokens.
Wait, unlocks are usually seen as negative, right? More supply hitting the market.
Often, yes, they can create selling pressure. But the thinking here, or what the smart money might be betting on, is that these tokens aren't just going to be dumped. Maybe they're earmarked for specific things like new staking programs or funding development grants or improving governance features, things that could actually boost network activity and value rather than just flooding the market.
Okay, so a strategic release, potentially. And the third one?
The third one mentioned was PEPE, just noted as showing continued bullish strength. Suggests there's still strong interest there, maybe driven by its community or its specific niche in the market.
Right. So CRO, PI with that unlock angle, and PEPE. Got it. But then on the flip side, sometimes smart money moves look odd. Captain Altcoin had this. Kaspa top wallets keep buying KAS despite crash. Here's what they know. It crashed 65%, and they're buying. Isn't that just, catching a falling knife? Or maybe this what they know is just speculation?
Yeah, that's a really fair question, and it definitely looks counterintuitive when you first see it. Kaspa's token, KAS, yeah, it took a big hit, down 65% from its peak back in August 2024.
Ouch.
Big ouch. But the report suggests these top wallets, this smart money, they kept accumulating during or after that drop. So it implies they're not just reacting to the price chart. They must have some strong conviction.
Based on what, though? The tech.
That's likely a big part of it. They might be really focused on Kaspa's underlying technology. It uses a DAG structure, the Ghost DAG protocol. Stuff aimed at solving that classic blockchain problem. How to be scalable, secure, and decentralized all at once.
The trilemma.
Exactly. Or perhaps they have wind of something specific coming down the pipeline. Maybe a big partnership, a new exchange listing, some tech breakthrough that isn't public knowledge yet.
So it's a long-term bet, basically, looking way past the current dip.
It certainly looks like a calculated long-term play. They're seeing past the short-term volatility, betting on the protocol's future potential, whatever their specific reasons might be.
Wow. Okay, so what a day, huh? June 18th. We went from an immediate exchange action with IoTeX
Right, very operational.
all the way to a $3 million Bitcoin prediction, massive ETF inflows, this global regulatory race, and even seeing what specific altcoins the whales are supposedly stacking. It's quite a range.
It really is. And if you try and, connect those dots, all these different news items from just one day, they really do paint this incredibly dynamic, almost contradictory picture of the crypto market, don't they? Well, you see the raw speculation, right? Those huge price predictions. But then you also see the steady integration with traditional finance ETFs, Coinbase wanting to tokenize stocks. That's happening at the same time.
Yeah, it's like two different forces pulling.
Exactly. And then layer on top the whole regulatory uncertainty, the competition between regions. It shows just how much the market is still evolving, still figuring itself out, and how much external factors matter.
So wrapping this up, maybe a final thought for everyone listening. We've seen the volatility. We've seen the serious institutional money coming in and this constant stream of news like we just discussed. Given all that, what aspect of this whole crypto space do you think is really going to steer the ship in the next few months? And maybe more importantly, how does that change how we should think about value or even ownership in this digital world? Is it going to be driven by those wild predictions or the slow march of regulation? Or maybe it really is down to what the smart money is quietly doing behind the scenes.
That's the multi-million-dollar question, isn't it?
Yes. Or maybe multi-trillion, depending on who you ask. Definitely something to chew on.